This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are in the second half firmly of the week. We're coming to you from the CNBC TV 18 Motilal Oswal studios. Well, it's a orange or a red alert. Schools and colleges are shut, but someone asked me whether private offices will be shut as well. Well, it's not. We're here. Markets are trading, and welcome to the show.
It's actually not a bad day to come to office, right? Because the roads are empty since schools and colleges are shut. Yeah.
You know, I have a cab that I book and I come every day. So he called me. I said, "Sir, today there's no work." I said, "No. For us, there is work. I miss being a child today."
You know, I was at home and I asked our colleague Santya to check if it was schools were shut. This was in the evening, and I think she called back. She said, "So schools are shut," and the first thing I did was shout out loudly. Kids. And I could hear.
At least someone gets to stay at home, right? If it's not you, at least the kids are at home. But the Fed hike has come and gone, and I think the market has been pretty unruffled and has moved on.
It has moved on how, Sonia? Because I'll tell you why. Because, it seems like it was a kind of flat close, right? Choppy during the course of the reaction yesterday, and then by close, nothing. It was absolutely flat. And the changes will come up on your screen. The Dow 0.25% higher, the S&P almost nothing, the Nasdaq down about 0.12% or so on your screen. So you'll say, well, it's nothing. The FOMC hiked, but there was no new guidance which was provided. We don't know what the Fed will do in the September meeting, one way or the other, or beyond that. Basically, we don't know. There was no new indication of which way the Fed will go. This is the line, I think, which stood out. I think Chair Powell wanted to say this as clearly as possible, and I'm paraphrasing here, but this is part of what he said. He said, it's possible that we would raise rates again. It's possible that we would hold steady. So he's being absolutely clear that he's not being clear, that he doesn't want people to lean one way or the other. But nevertheless, in the press conference, the tone and tenor shifted dovish, more optimistic, and the markets responded as well. The US market also, I kind of started with the fact that indices were flat, right? The headline indices, but beneath the surface there is strength, and this is the reason why I'm saying this. The Russell 2000, which is the small cap universe in the US, that ended up about 0.6%. You got the banks index, which is up 1.5%, and WIX is below 14. And actually, this is a pretty positive setup. So forget about what the S&P did, which was nothing, which was flat. Look at this picture, and it tells you that the undertone is positive. And I would say that given this kind of picture out there in the US as well, and what we heard in the press conference, the bias is for the upside in the US as well, maybe later today and over the next couple of days and weeks as well. Now, for the Nifty, just to come back here, and we said this day before yesterday, that if the index were to hold 19,620, you're in a pretty good place. The sideways consolidation perhaps would be complete, and that's exactly what panned out. Day before yesterday, the low which was made was around that 19,620 level. There was a decent bounce. Yesterday, the market ended 0.5% higher, and I think that's a starting point for us today. So I think the way to think about this is, as long as the Nifty stays above the 19,620 level, I think you should look for upsides and not downsides. Maybe it'll be a little choppy, etc. But I think and I said this almost exact same words yesterday as well, it's possible that the sideways consolidation is over and that the market wants to go higher once again. One indication is that the Nifty and other indices as well continue to make higher highs and higher lows. Basic Dow theory. Now, banks index closed about 0.5% as well, almost 0.5%. On the banks, we should cross the recent high first, which is 46,370, and then perhaps head a little higher. Key support for the Nifty bank stands at 45,673. The GIFT Nifty rates will come up on your screen, and I think that is indicating a positive start. And why not? Because of what we heard overnight, and of course the momentum that markets have been seeing for the last 2 days. Day before yesterday, bounce off the lows, and yesterday a positive close by itself. Sonia.
Oh, absolutely. And you call this sideways consolidation, right? Even amidst this sideways consolidation, the market has gone up 5% in a month. Yeah. So that's what we're used to so far. The kind of stupendous rally that this market has seen. There was a very strong recovery that we saw on Dalal Street yesterday, and this 5% rally that we've seen in the last 1 month has been backed by a lot of institutional buying. So even yesterday, you saw both FIIs and DIIs buy in the the cash markets. FI has bought a little under 950 crores and DI has bought about 500 crores or so. The markets globally and locally have priced that Fed hike in. So you saw the Dow end up about 80 odd points. There were good earnings that came in from Meta. So, that's another thing that the street is focused on, earnings and how it's improving. So Meta reacted about 9% higher, posted a good set of earnings globally. But locally, you have a lot of numbers to react to. There's Tech Mahindra, there's Axis Bank, and both were weak set of numbers. So I'll keep my eye out on that. Revenues under pressure for Tech Mahindra. The management saying that the quarter was challenging. For Axis Bank as well, the NIMS is the lowest that we've seen in the last 3 quarters. Of course, the street will also react to M&M buying the 3.5% stake in RBL Bank. And in that context, there are some concerns on the capital allocation policy that M&M has done. There was no intimation of this stake buy. So is it an issue of corporate governance? Maybe the stock could be under pressure today. I'm watching out for that. In results to watch out for today, there's ACC, Nestle, Bajaj Finserv and Bharat Electronics that will be reporting numbers. So lots to talk about. We have our hands full. But for now, Nigel, looks like the bulls have it. They're going to, rain or sunshine, whatever happens, the bulls are on track to reach new highs.
Well, that's right. But, Sonia, I'm a little bit worried about these 2 results that came out from 2 pillars of the market, IT as well as banks. You have Axis Bank from the banking space, and from the IT pack, you have Tech Mahindra. So how do the bulls, they combat both these 2 sectors will be interesting in today's trading session. But today is going to be a good day as it is, because we are on course to register the 4th straight series in the green. And that's not happened all the way since May 2017. Last few series have been good, and the chart should come up for you. As of now, we're up close to around 800 points in this series, and the previous 3 series as well were pretty good. That chart should come up for you on the screen. Now, the Nifty Bank, that seems to be in a bit of a consolidation phase. For the last 5 sessions, it's been in this range of around 45,600 odd to around 46,370 approximately. So in that range is what we have seen. And yesterday it formed an inside candle day. What is that? The range was even narrower. If you look at the high and the low of the previous session, and you look at the high and low of yesterday, well, it's a little bit narrow out there. So it was an inside candle day for the Nifty Bank. Is it done with this consolidation? Can it hold on to the lower end of the range? Well, that will keep the bulls quite happy if we don't see the break at the lower levels. What do the FIs do? Well, they added long positions going into the expiry day, close to 7,000 long contracts odd, close to 3 longs added for every 1 short position. And now the long positioning is at around 67%. On the option side, what's encouraging is they wrote more puts than calls. And the 19,750 put, well, that was very active yesterday. Added close to around 45 lakh shares. Premium were there, close to around 44 rupees. So given that saw some bit of writing, well, and you have at that 19,700 put call, the PCR only for that strike is 2.8. That's indicating that the bulls believe this 19,700 level will hold up. So support comes in at 19,700. For starters, the Gift Nifty suggesting we start above that resistance. But yesterday we did a U-turn from close to around 19,840. So sustaining this gap up is going to be crucial. And as I mentioned earlier, you have 2 results that are disappointing from the banking and the IT pack. So let's see how that weighs on the Nifty. But we need to sustain this gap up and then take it from there.
Okay, let's see if this gap up sustains. For now, it looks like it's going to be a very, very good start. We have lots of commentary coming in through the course of the day. First up, Sanjay Mukim of JP Morgan says that the Nifty valuation is close to pre-COVID highs. While the earnings revision remains negative, he says banks continue to be well placed where relative valuation has improved. They prefer ICICI Bank, HDFC Bank, SBI and Bank of Baroda. He says IT appears inversely placed with slowing earnings downgrades and elevated relative valuations. He adds that staples are amongst the best defensives when market is weak and they prefer HUL and Marico. Staples along with two-wheelers should benefit from the improvement in consumer sentiment. Sanjay adds other sectors they like are real estate where they prefer DLF and hospitals where they prefer Apollo Hospitals. They are underweight discretionary stocks.
Well, let's get you some money market views now as well. This is Parul Mittalson of Standard Chartered Bank, who says that the dollar INR is continuing to consolidate in a tight range amid a brief slip to sub-82 levels. She says rise in oil prices, slight uptick in dollar and US dollar purchases from PSU banks capped the downside in the USD INR. She expects the pair to trade between 81.7 to 82.2 next week. Adds that the dollar eased somewhat post a balanced FOMC guidance, and the focus now shifts to ECB, Bank of Japan decisions, and of course direction for oil prices.
All right, and on the bonds, Parul says domestic rates moved in a tight range ahead of the key central bank meetings, along with worries of rising oil prices and the 6% July CPI print, she says the FOMC hiked rates as expected and turned data dependent. Her research team now expects no further rate hikes. Next week, she expects the 10-year benchmark bond yield to trade in a range of 7.05 to 7.20%, with global rates, oil prices and domestic food prices as key market drivers.
Well, we have a lot of stock-specific action to track for you. Get to that in just a bit. That's a special top 10 segment that will come up for you. And we'll just highlight the stocks for now. We're looking at RBL Bank, Dr. Reddy's, Tata Consumer, Colgate, Marico, Vesuvius, all of them in the back of positive news flow. On the flip side, you have Axis Bank, Sun Pharma, Tech Mahindra, and RBNL that will be reacting to negative news flow.